Hello everyone, and thank you for joining us tonight. My name is Jean McDowell with TradersCoach.com, and I'm looking forward to introducing our educational speaker. Welcome to those of you that are new to TradersCoach.com, and of course it's so good to see all these familiar names in our webinar room as well. Tonight we have Bennett McDowell of TradersCoach.com speaking to us about 3 filters that can boost your returns. Many of you know Bennett since he's the founder of TradersCoach.com. He's an expert in technical analysis, money management, trading, psychology, and more. He speaks at a variety of trade shows, and he has definitely written a number of articles for Stocks and Commodities, and he's also honored to present the Trade Station Morning Market Briefing every Wednesday morning. In addition, TradersCoach.com has received numerous Stocks and Commodities Reader's Choice Awards, and McDowell has written 3 best-selling books published by John Wiley & Sons: The Art of Trading, A Trader's Money Management System, and Survival Guide for Traders. His Elliott Wave Technique Simplified book is due out in 2015. Well, Ben, I'm going to turn the mic over to you, and thank you for being here.
Jean, it's great to be here. Thank you very much, and thank you everybody for attending. We've got a really exciting hour to talk about 3 tremendous indicators. I developed each and every one of them. I use them in my trading. I use them when I day trade. I use them for swing trading. I use them on long-term charts, so they can be used on any time frame and any market. And if we go back to the actual acronyms and what they mean, the 3 are the OWL, which stands for the Optimum Wave Locator, the PTF, which stands for the Precision Trend Filter, and the TLM, which stands for the Trendline Master. So what I want to do this hour is go through each one of these indicators, and I want to talk about them as if they were used by themselves and together. And I know many of you, a lot of my students are using the Applied Reality Trading software for their entries and exits. Other folks may use some other system. And the beauty about these indicators is that they can be used with any entry and exit trading approach. So you use them as filters, and I'm really going to be able to show you how they can add a great deal of benefit to your current trading style. And primarily, it will keep you from trading. If you're a trend trader, where do you get the most trouble? During non-trending markets or even correcting markets. So I'm going to show you how these indicators will keep you out of non-trending or corrections in a good trend trade. So we'll talk about that. Also, too, I just want to briefly mention I have several books out there, so if you want to learn more about me and my style of trading, these books will really give you a great idea of what I'm all about. I've written one on risk control, on the ART software, and the Survival Guide for Traders. I've got the Elliott Wave techniques coming out early next year, and these are all being offered either at Amazon, like I said, or any major bookstore close to you. So you may want to check that out. Also, come to our website, because we've got a great website at TradersCoach.com where we got a lot of free information, so you can come and check us out there as well. This presentation, I have to say, is there's risk in the markets. It's required that I do tell everybody that there is risk when trading the financial markets. But you know, without that risk, there's no opportunity. So the 2 go hand in hand. So risk is a part of life, and it's a part of trading. And so you have to accept it, but you want to be able to control your risk. And I think that's an important part of the whole paradigm of trading. So you definitely want to keep that in mind. I got a couple questions I want to ask everybody out there. Have you ever been in a trend when you're trading, whether it's bullish or bearish, and wondered if the recent top or bottom is the end of that trend? So in other words, let's say you've been in a trend for a while, and it's a bullish trend. It reaches some form of top. We've seen this a number of times. Market backs off, and you wonder, gee, was that a final top? How many people have had that issue? And I'm sure everybody have, because I have as well. And that is one of the reasons that led me to develop this suite of indicators. So when I get done here today, you're going to see how I use these to help me when I get to a top to determine if it's a final top or if it's just a temporary pivot point top in an ongoing trend, okay? All right. Another question for you. Should I get out of my trade now or wait for more profits? How many people are in that, whether it's a bullish or bearish trend? Always ask them that question as well. And you know, when we talk about getting out of a trade, you can certainly exit the entire trade and also scale out of that particular trade in increments. But usually what happens is, unless you're using some form of tools or analysis that can help you pinpoint a top, what usually happens is that you either emotionally get out of the trend, and you usually get out way too soon, or you stay in a trend way too long. And so again, the purpose of these questions really is to isolate, again, what exactly these indicators are going to be helping you doing. So, and we're getting a lot of yeses up there as well. All right, would you be interested in adding an easy-to-use trading tools to enhance your current trading approach and to identify high probability odds for more highs or lows? And the answer is of course, right? That's why you're here. All right, so we're going to show you how to stack the deck in your favor with 3 indicators. Now, some of you may be using them already, and some of you may be using 1, 2, or 3 of them. But we're going to go over each one of these indicators. So if you're not using one particular indicator, you're going to learn the benefits of perhaps adding that indicator to your toolbox. So I'm going to show you these 3 trading filters. And again, I want to emphasize they can be used on any market, any time frame, Forex market. And I'm going to also, towards the end of the webinar, I'm going to actually go into my charting platform and show you some live markets. And we'll take a look at a Forex market. We'll take a look at an intraday market and show you how these filters work, okay? And the other thing I want to talk about too is everything is probabilities when we do trading. There's nothing 100%, but one of these indicators called the PTF I'm going to show you has a 75% probability. So it's a really dependable indicator, and I'm going to show you how we use that to avoid getting caught in corrections in ongoing trends. We're also going to talk about the OWL and how we use that, because there are a number of ways in which we use that, as well as the trend line master. Let's first quickly talk about the precision trend filter. And I'm getting a question, are these available on TradeStation? They are. All our software, the OWL, PTF, and TLM are available for TradeStation. They're available for eSignal, and they're also available for NinjaTrader. All right, so let's take a look a little bit at the PTF indicator. You're going to see when I show it to you, you're going to see it generates 3 types of signals, a bullish signal, which obviously will be green, a bearish signal, which is red, and a neutral or yellow signal. So if we look at the PTF at the bottom of this chart, notice that you see the green and yellow bands. You don't see any red bands here because right now this is a bullish trend. Later on I'll show you a chart with some red in it. So what happens is that there's an oscillator in the PTF down here. When this oscillator breaks above the upper band, it actually will turn the indicator green. Okay, so what that means is that when it turns green, the high of the price bar in the green boxed area, there's a 75% probability that that high will again be taken out. Now the wild card is that you may have a correction in the ongoing uptrend, but the odds are in your favor that that high is not the final high in the trend. And so the idea here is when you're in a stagnant market like this, it's very helpful to know that there's a 75% probability you're going to break out and go above that. A lot of folks, when they get to that particular high and they've had a nice trade and they're sitting up there and they don't have this type of indicator indicating that more highs are coming, are going to be more apt to emotionally get out of this trend. And the more it goes sideways, the more your emotions play games on you, and you tend to want to move on. But in this case here, what happened is we sure enough did once again go above that old high, and when we did so, the indicator turns from a green to a yellow, and the yellow is neutral. Okay, so this is bullish, this is neutral, and then it continues highs and triggers another green. So now we know we're going higher. It did it on this price bar, turns it neutral again, continues on up, and turns it green again. Now, the yellow or neutral color does not necessarily mean, okay, that you cannot take trend trades. What it means, however, is that the momentum that created the high that was created in a green section, okay, has dwindled. It's no longer significant, and therefore the indicator goes neutral. So there'll be times when it's yellow giving you a neutral reading, and at that particular point it's neither helping you or hurting you, but it's not giving you a signal. So the only time it really has meaning is when it is green or red. When it's yellow, it's just neutral. But it usually turns green or red during significant swing points or pivot points, okay, in certain swings up. And you can see those located here. Let's move on and take a look at another chart to give you a little bit different idea of what it may look like on a different chart. Okay, here it is on a bearish move to the downside. Now, again, if you were in this trade to the downside and you reached a bottom here, what do? Well, you're going to get some form of correction, and that's what you're seeing occurring to the right of the bottom there, this area here. But isn't it nice to know that this low is not the final low? The prices will return and go lower with a 75% probability. So I listen to this PTF quite a bit. I will not take long trades, all right, in a situation like this and go against the PTF. So that's where it's extremely helpful, all right, in doing that. Now, in terms of stops and things like this, because James is asking a very good question, what your stops are probably going to be based on your trading approach. Now, we use something called applied reality trading, and I've pretty much removed it from the charts because I want to specifically show how these indicators can be used to filter certain types of trend trades and even scalping trades at times. So your stops will be placed by your particular system. But, you know, if you have a red PTF, all right, and your system says, okay, exit here, you may want to scale out, or you can certainly exit, whatever it says, but you're going to have more lows. You certainly don't want to go long here. So the key is you don't want to trade against the PTF because of the fact that it is one of these indicators that has a rare accuracy rate of 75%, and that's high in the markets. Okay, so that's kind of the thinking behind using it. If you were using a system and your stop may be, let's say, up here, all right, but you're nervous in here, the fact that it's red should calm your nerves and keep you in the trade. All right, so that's kind of the idea. Some systems will give you a hard stop, some will give you a scale out stop. So if you have a scale out stop and you've had a big draft or move to the downside, like in this example, hey, there's nothing wrong with scaling out a little bit, but the idea is you want to try to stay with the trend to the downside, okay, and just don't take any long trades. Any questions on that? Because I think it's important. You got to understand how it can help you. No, JD, these indicators are for stocks, futures, ETFs, Forex market. Basically, if you can chart it, these indicators will work. And the reason why is because every market that has price and volume also has momentum. And so that's how these things work off of, the momentum of the market, and every time frame too. So I'm going to show you when we go to some live charts how these work on various time frames. You could use this. I'm getting another question about shorting the market. Absolutely. And I'm going to show you some examples that about that. I think a picture is worth 1,000 words, so to speak. So when I get to a short position, I will show you that, okay? This is a good question from Richard. Is this indicator for keeping you in the trade or entering the trade? Well, honestly, it could be used for both, because if your system is giving you a signal, all right, to the short side, let's just say you showed up at the chart right now, all right? You weren't short before, and you're getting a short signal right now. Well, the fact that you have a red PTF and a short signal on your particular trading approach, the two are in sync. So you can go short on this and have a pretty good confidence you'll at least clear the bottom of that particular move down that created the red PTF. Great questions. We'll look at some more, and I think it'll clear it up also when we look a little further at some more actual markets. All right, I'm going to skip now to the OWL indicator, but I want to make sure everybody's okay with the PTF and kind of get the hang of it. So it's good for bullish and bearish markets, and when it's green or red, it indicates either more highs or more lows to come. Now, let's move to the OWL for a minute, and then after this, we're going to move to the Trendline Master, and then at the end, I'm going to show you all three and how they can be used together. So we're going to revisit the PTF again. All right, so the optimum wave locator is called the OWL for short. And there's really three ways to use this indicator. Okay, you can confirm trades based on the OWL histogram as either positive or negative in relation to the zero line, and I will show you that. It also, if you like Elliott wave, it finds Elliott wave 3 because the highest histogram, either bullish or bearish, will indicate a bullish or bearish wave 3, and I'll show you that. The OWL histogram value can confirm trade entries as well. So three ways in which we can use it, and let's go ahead and take a look at them. All right, this is the OWL indicator illustrating Elliott wave. Now, what it does is it will either label wave 3 on the highest indicator, or like it did here on TradeStation, it will put a pink dot. Now, TradeStation doesn't let you write text over a histogram, so we have to use a pink dot on TradeStation. But it means significantly the same thing. The pink dot is always drawn on the histogram bar that has the greatest value. In this case, it's a bullish histogram because it is above the zero line. Now, the zero line would be right here, separating bullish from bearish. I happen to have all this cut on green for this example, but the way the indicator works is when it goes bearish, it actually turns red. Okay, so it's very easy to see. And we'll show that on live charts. So what it's saying is that this histogram is the biggest histogram in the last 144 price bars, which is a fib number that usually relates to the current Elliott wave count, and it indicates wave 3. So this would be a wave 3 at this point. Now, one of the things to notice here is that notice the pink dot, like I said, was on the highest histogram bar, but that does not necessarily mean that's the top of wave 3. Wave 3 always is the highest price in the histogram as long as it doesn't go bearish. So this entire histogram down here is Elliott wave 3. Okay? When it goes negative, then we know it's going into a correction, most likely Elliott wave 4. All right? So that's, in a nutshell, how you can use the OWL to help you identify a wave count. So if you have 3, after 4, we have one more high coming, and that would be wave 5 in an example like this. And here basically is just a basic illustration of a bullish and bearish Elliott wave sequence. And there are 5 waves in an Elliott wave sequence, or an impulsive wave in which they call it. Waves 1, 3, and 5 are all going in the direction of the dominant trend. Waves 2 and 4 are corrections in those trends. And there's a whole bunch of rules associated with the symmetry or geometry of these waves in terms of math and how much they can retrace and so forth. But for just a basic study, just know that there's 3 waves. So if the OWL identifies 3, then you know there's 4 and there's 5. So chances are you're not done with the trend yet. And so that's nice to know if you get to a top of 3, what you should do. And here's an example, an actual example on Apple stock when it reached its high previously last year in September. And since then it corrected and has gone back above. But what I love about this chart is the clear Elliott wave structure. So you had 1 here, 2 here, 3 here, 4 here, and 5 here. And then also you have little waves inside, and those are drawn as well. But that's a classic Elliott wave 5 structure. So if you're looking at the owl histogram, it would start to increase here, all right, and be the highest in this wave 3 area. And if it's higher than any previous waves, that's a time you want to enter. All right, and then when you have a wave 5, okay, which would be a bullish after a bearish, so in other words, here is the bullish Elliott wave, the two bullish ones. This is 3, negative, correction, 4, and 5. So notice you have 3 happens to be here, pretty much where the pink dot was. You had a correction down here, an A, B, C, okay? And then you had 5 in this area here, reaching new highs, but the histogram was not as high as it was on 3. So therefore you have bearish divergence, which is normal and expected, and you should get that between waves 5 and 3. Here, if we go back to Apple again, a little bit more drawn in, including some of the art software. But again, the purpose of this is to label how you would use the owl. There's 3, there's 4, there's 5, there's your bearish divergence, even though you have higher highs, you have a wave 5 target zone, and then it sells off, and so does the owl. Okay? So that's the owl, and we're going to go over a little bit more in detail when I go to live charts of how to use the values in the owl as well. Okay? Yes, wave 5 is higher. If we go back and take a look on that, wave 5 is always higher than wave 3. Okay? But the histogram between the bullish wave 5 and the wave 3, and this is a question coming in from Mr. Liu, is that you have the wave 5 not as high in the histogram as it was here, okay? And this is 3 and this is 5. So wave 5 will be higher, but the histogram will not. And a lot of times, Richard's asking, does the owl signal the end of wave 2? A lot of times it does, because you see here it was bearish here, and then bullish here. The way we trade is we don't take any long trades unless the owl is above the 0 line, okay? And I'll show you a little bit on when we look at live charts about that too. All right, so I got a couple more things I want to cover on the owl, and I'm going to do that on the live charts, and that's the actual values and how to use those. All right, let's move on to the Trendline Master. This is the TLM indicator. All right, the Trendline Master, by its very name, obviously draws trend lines on your actual price structure, your charts. And it draws a couple different kinds. It draws a short-term swing trend line, which really catches pretty much all the swings in the market. And it will be light green for a bullish swing and light red for a bearish one. It also draws long-term trend lines, and it is dark green for a long-term and dark red for a long-term bearish, okay? All right, so, and it also is neutral when it's in a channel. When a market's in a channel, it won't draw anything, any trend lines. It'll just be neutral. All right, the other thing, too, it does is it puts a ribbon at the bottom of your chart, an indicator ribbon. And the indicator ribbon, the purpose of it is so you can easily glance to the bottom of the chart and see what the trend lines are showing. Are they bullish? Are they bearish? Or is it neutral? And if it's a light green, it's going to be in a very sharp uptrend that's still active. If it's a dark green and some of the lighter greens were penetrated, then you know the long-term trend is still valid. And on this chart here, it gives kind of a good example of that. So if we take a look here, notice that few things. One, these are all the trend lines that the system has drawn on. And this is the ribbon way down here at the bottom. Okay? What you really want to focus on is the current color, because currently that's going to be what it is in relation to all the trend lines drawn. So notice it's dark green now because it's still right above the long-term trend line. It has penetrated all these short-term trend lines. Now, how can that be helpful? Well, it can be in a variety of different ways. When it penetrates a short-term trend line, you can either scale out a little bit at that time, or if you are trading only the current swing and not the trend, okay, that's going to be a sign to exit as well. But the idea here is with these trend lines automatically drawn in, notice you got a real close one here. It will connect the two supporting areas of any particular swing to give you those trend lines. So it's pretty neat the way that works, and it's really helpful. And the other neat thing is you can remove all these trend lines. Let's say, you've got some type of trading approach that you want to be able to clearly see the chart. You don't want all these trend lines up here. Well, what we can do is cut the trend line drawing off and just keep the ribbon at the bottom. This is why I developed this with the ribbon, so you could know by just glancing at the bottom if you are still above the long-term trend line or you're still above the short-term trend lines. Okay, so that's helpful because obviously that's an important aspect to know of what the trend lines are in relation to current prices. Now, let me just quickly ask, make sure everybody can see this chart. I've got eSignal up. I'm going to probably switch over to TradeStation and then probably NinjaTrader for a little bit too. So hopefully you can see the chart. Just one or two of you give me a yes. All right, good. Thank you, everybody. All right, I'm getting a question what the triangles are for. On some of those other charts, that is part of another trading system called the Applied Reality Trading System that we use for our entries and exits. And we also have that as our primary trading approach here at traderscoach.com. So that's available as well if you want to go to our website and look at it. But for these examples on the indicators, what we want to focus on is not confusing everybody, it's just focus on the indicators themselves. All right, so I got a 60-minute chart up on the left-hand side, and I got a daily chart on the right-hand side, and this happens to be Target, okay? This is a retail stock. And notice that, they're on both charts, okay, we have a breakaway market here, all right, and this is amplified here. Okay, because this is a 60-minute chart. Each one of these price bars is 60 minutes. Each one of these are daily. So when you do this, when you have two charts, you kind of you magnify and go inside this. And we do this because our trading approach can be that, hey, we want to trade this, but the stops are so far away on the daily chart that we'll go for a short-term momentum trade. But one of the key things we look at, all right, is let's take a look at these indicators we just talked about. Let's take a look at the chart on the left for a moment. So if we do that, notice a couple things right away. One is we have a wave 3 here. Okay, we have a very, very tall owl, and that's above the 0 line. And notice we have below that a green PTF. So what's the highest high in that green area? That would be this. So we know we're going higher than that. And we got pretty much this short-term trend line is still active. So we've got a light green here on the trend lines. So this thing is pulling up, up, and away, isn't it? So the idea here is you've got more higher highs coming. If we go in the daily chart and go over here and take a look, notice we got a wave 3 building even on the daily chart. And we got a green PTF and a green trendline master there as well. So this is looking really good for a long trade. Would you want to take a bearish trade against this? No. Okay. Are you going to get a correction in this trend? Probably, but it's just going to be a minor correction, and they're very difficult to trade on going against the trend. So you got to be careful unless you want to drop down to a very short time frame. So on these two time frames, you want to try to time your trades to the long side. And that's what these indicators at the bottom are helpful in telling you, that we're nowhere near a significant top. We may be near a short-term top where we'll get a pullback, but not a significant top. Okay? So that's what we're looking at there. Okay, so that's one. Let's take a look at a couple others here. Let me just go to another platform here. Let's go to TradeStation here. Here's the Euro USD Forex market. Now again, I have our trading system on here, so I'm going to remove that. I'm going to go to Format Analysis Techniques, and I'm just going to take these off, cut them off. All right, so there's the trend lines being automatically drawn in. This is Fibonacci here. I'm going to remove this, okay? So that's what the trend looks like. And so notice that very early on, all right, we got a bearish owl indicating the start of something, interrupted by a wave 2, slightly bullish but not very, and then wave 3 coming in earnestly. Notice we have no green PTF, all right, so we can take short trades anytime we want, even on the yellow, okay? You just don't want to take a short trade if that PTF is green. So everything's pointing down. As the trend develops, all right, trend lines start to be drawn in, and those are done in this area here when we start to have some things to anchor those trend lines to, some support levels, and then it turns red. So you obviously looking at this, we got a red owl, and you've got a red trend line master. You don't want to be taking long trades. You want to be going short this. So when you're trading this particular methodology and thinking about how your system would generate entries and exits, you can see if you are in sync with the indicators, then you go with the signals generated that are in the direction of the indicators. And you'll always, it'll be pretty difficult for you to miss the trend at that point. That's the Euro USD. If we go to NinjaTrader, here's another one on JDST, which is a 3 times bear gold market. And notice here that some interesting things, okay? We were able to get in way over here, okay, when we got our first entry, but we also waited for a bullish owl, all right, at that particular point, all right? We had a, if you look at this way down here, this is something that had come down really significantly here. You can certainly see way, way down. So now we're stuck over here, and so if you are looking to get into this, all right, you still got a bullish owl, you got wave 3. The most amazing thing with this is you've got what? You've got a PTF that's green. So the highest high in that green area is above 40 bucks, and prices are at 26. So there's a 75% probability we're going above this particular price bar. I don't want to look for short trades. I want to look for long trades. So when my trading approach tells me to go long, and I'm in sync with these signals at the bottom, you go long. Let's look at some others. Let's go back here and type in, let's see what we got here. Let's type in Radio Shack. This is another one. Whoops. I think I just minimized that. Hold on one second. So we'll take a look at Radio Shack here. We'll go to, while this is loading. Let me bring up the other one too. Okay, here's what I want to look at. I want to look at the daily. So here's the daily on Radio Shack. All right, Radio Shack went down to 50 cents a share. All right, so it's really one of these that could even go bankrupt for all we know. But all right, with that said, all right, it also could recover, and we may even get a bounce off this. So this is an example of how you can use this on all markets and all time frames. This is basically a penny stock. And notice that the PTF is green, all right? Notice that that green high here sits right above here, all right? And that gives us a high of around 177. Prices are at 88 cents. So based off that, the PTF is telling you that eventually this thing should get higher than that. Now, let's see about entering right now. Well, guess what? The owl just turned red. You see that little sliver of red here? So you don't want to go in yet. Don't go in until you get a positive or green owl, because this thing may be coming down. It may come down a little further before it turns around. You may be able to get a much better price. So you want to stick with that, okay, at this particular point. So the idea here is when you have a green PTF, don't go long until the owl is also green, and then take a look at your trading system to tell you when it's giving you exact entries and exits. And obviously, if it's giving you a short trade here, you don't want to take that because the PTF is green at this particular point. But, if you get a better entry and this thing gets above the 177 mark, which the PTF says there's a 75% probability, then you'll make quite a percentage return on your money, okay? Let's take a look at another. Here's another one, okay? This one here is at 274, all right? Look how flat that was for so long, all right? So this is broken to the upside, and this is one actually a student of mine shared with me, and it's pulled back down. And notice the green PTF. So there's a 75% probability we're going higher than 6.29. We're sitting at 2.74. We got a bullish owl, green PTF, yellow trend line. That's okay. So the idea is you can take a long trade at any time based off this, and when your system generates that type of signal. Again, remember, these are filters. These are not telling you exact entries and exits. Use them as filters to sync up your trading approach, okay? Here's the E-mini. Notice we had a move up. Again, I don't have a trading system enabled here. I turned mine off. So yours may have generated certain signals here and there, but we would not have gone long on this 2-minute time frame until the owl goes bullish, okay? And now it's gone bearish again. Notice we have a yellow PTF, and we had a green trend line at this point. So you don't want to go long now because the owl's negative. So I'm going to bring up a browser, and it will take you to the actual order page. Here's a question, Bennett, what is the best platform to use? I use TradeStation. TradeStation, I like TradeStation. There's nothing, I find it a great platform. I like them all. I think they're all good. So I think it really comes down to a personal preference and one that you're used to, because there's a little bit of a learning curve on all the platforms. So if you find that the data works well in there and things are working well, then I would stay with whatever platform you're using. If you don't have any of the platforms, if you're new here and you don't have any of the platforms, what I would suggest doing is going to Ninja, because NinjaTrader has they will give you a free platform. You don't have to pay for anything. The only time you pay them something is if you buy a module that allows you to submit orders through their platform to a broker, okay? Otherwise, the platform itself is free, and our indicators work in that platform, and they even give you free end-of-day data, or you can connect it to a data of your choice. You may have to pay for that data, but the platform is free. Okay, you're welcome. George is asking, can he load it on his laptop as well as his desktop? Yep. And all the software is downloadable, so you don't have to wait for anything to be mailed to you. Oh, you're welcome, everybody. I'm getting a lot of thank yous, and I appreciate that. Gene, you even got a thank you here. All right, well, I think I got them all, okay, and hopefully I did. I wanted to stick around and just make sure everybody got their questions answered. Yep, I think I got them all. Okay, well, listen, I want to thank everybody for taking the time, and I got to tell you, I use these indicators every day, and I don't like to push anything on anybody, but I got to tell you, I don't think you can go wrong with them because they've really helped me a lot. And I am pretty much a price guy. In other words, I enter and exit the market based on price structure. But there are times when I need to know if I'm in a correction or in a trend, and that's where these indicators really shine. So they're excellent filters, and I just think they're terrific, all three of them. And I don't think one is any better than the other. I think it depends on your trading system and how you make decisions on using that. So there you have it. All right, and again, these are lifetime licenses, so once you buy it, you don't have to buy anything else in terms of the indicator, okay? All right, well, Gene, I'm going to turn it back over to you. Thank you, everybody, and thanks for the great questions, okay?
Thank you, Bennett. That was a great presentation. And I have to say, the lifetime license really does make sense. We've got clients that have been using software of ours since 2003. So that's over 10 years worth of use for a lifetime license. And since these are only $399 each, that's a lot of value. Plus, Bennett has his webinar every Wednesday, a support webinar where you get Bennett directly every Wednesday and you can ask him questions and he shows you charts. So if anyone has questions this evening, you can email us at info@traderscoach.com. And again, we thank you all for being here and we hope you have a wonderful evening. Have a good night.
Gene, I'm just going to jump in real quick because a couple things I forgot. One is, yeah, you get a lifetime license, but you also get all the updates. So when we say a lifetime license, that means if, you know, for example, that person, and we have a bunch of people that bought our software back in 2003, the art software, they get the newest version. Okay, so when we give you a lifetime license, it's not just that version, it's any update after that. Also, being asked here, do I need 2 licenses for the laptop as well as for the desktop? No. We activate you on 2 of your computers. So you could use it in both cases, George, without having to have 2 licenses. All right, let's say, and B&J said, can you move it to a replacement computer? Yes, you can. Okay. In other words, if you have a computer and decide to get a new one and get rid of the old one, then we will, at that time, just move your license over to the new one. So that's easy. Okay, great. All right, well, thank you, everybody. See you later. Thank you.